If you are a business owner and you think the IRS decide how much you owe in taxes, you are wrong. And that belief is costing you thousands, not just in overpaid taxes, but in penalties. Today, I'm going to show you why the IRS do not decide your tax bill, the 3 deadlines you cannot miss, the real penalties for filing late, and why an extension does not mean you get more time to pay. Stay with me because most business owners misunderstand this completely. Most business owners operate reactively. They gather documents. They send everything to their tax preparer. They file, they accept the results, and they think this is just what I owe. But tax law is not random. It is written to incentivize behavior. The government wants housing development, so real estate receives depreciation. They want small business growth because the economy relies on entrepreneurs. They want job creation, which is why payroll credits exist. The tax code is a system of incentives. If you understand it, you can legally reduce your tax bill. If you don't plan, you overpay. But before we talk about saving money, we need to talk about something more urgent. Strategy means nothing if penalties are eating your profits. Let's talk through the major federal deadlines for 2026. March 16, partnerships, S corporation, multi-member LLC, file form 1065, 1120S based on their structure. If you miss this deadline, the penalty is $245 per partner or shareholder per month for up to 12 months. Let's do real math. If you have 3 partners, file 4 months late, 245 multiplied by 3 partners multiplied by 4 months equals $2,940. And that's before interest. This is why compliance is step 1. April 15, individuals file 1040 and C corporation file 1120. If you fail to file, you will owe penalties, interest. Interest does not pause. Waiting become expensive. May 15 is the deadline for nonprofits. They file Form 990, 990 Easy, or 990N. The penalties for failing to file is $20 per day for smaller organizations and up to $110 per day for larger organizations. And if a nonprofit fails to file for 3 consecutive years, guess what? Automatic revocation of tax exemption status hit. Reinstatements become expensive and it's not quick. If you cannot file on time, you can file an extension. But when you file an extension, your extension is an extension to file, not an extension to pay. So you want to make sure you pay your bill. The IRS still expects you to estimate your taxes. Pay what you reasonably owe by the original deadline. If you don't, failure to pay penalties and interest begin immediately. Extensions protect you from the 5% failure to file penalty, but they don't protect you from interest. This is why planning before the deadline matters. Once you are compliant, now we architect. This is where real tax strategy happens. Strategy can include choosing the correct entity structure, choosing the right retirement plans contributions, timing income and deductions, real estate depreciation, accountable plans, cost segregation, income shifting, quarter by quarter tax projections. But here's the truth. You cannot build a strategy in March for last year. You build strategy throughout the year. Planning is proactive, filing is reactive. Most business owners are reactive. The ones who reduce their tax bill, they plan before December 31st. If you feel like you have no control over your taxes, it's not because you don't, it's because no one explained your options. The IRS does not decide how much you owe. The law provides incentives, your structure, your timing, your planning, your advisor. That's what determines your tax bill. Start with compliance. Protect yourself from penalties. Then architect strategically. If you are a business owner and you want to stop reacting and start planning, start now. Not when you receive a letter, not when penalties hit, not at the last minute, because control is built before the deadline. If this was helpful, subscribe to this channel, share this with another entrepreneur. My name is Noura. I help thriving entrepreneurs stop overpaying in taxes.